North Carolina is one of the fastest growing states in the country. Growth here is fueled by corporate relocations, world-class universities, and billions of dollars in new investment. Charlotte has become a national financial and logistics hub. Greensboro is emerging as a leader in aerospace and advanced manufacturing. In this video, I'm going to break down why Rise48 Equity is focused on these two markets and why their fundamentals are so attractive for multifamily investing. North Carolina is winning on both people and business migration. Within the state, Charlotte and the Triad stand out. They combine diverse job bases with relative affordability, and they're tightly connected to the rest of the East Coast. That means a wide demand funnel, reasonable living costs, and great access. Exactly what we want as long-term multifamily investors. Let's start with Charlotte. The city is a top U.S. banking and financial services hub, and its tech and professional services sectors keep expanding. Charlotte Douglas International Airport is a major driver. It hit record traffic in 2024, ranking as one of the busiest hubs in the country. That level of connectivity attracts companies, talent, and capital. Population growth remains strong. The Charlotte Regional Business Alliance continues to highlight inflows of both people and firms, outpacing many other large metros. That steady demand has supported apartment absorption even during heavy new deliveries. RealPage data shows Charlotte's delivery wave peaked in 2025. That's usually when pricing discovery settles and fundamentals start to stabilize. This is the window we like to enter, when concessions are clear, lease-ups are progressing, and rent growth patterns are more predictable by submarket. Bottom line, steady demand, improved affordability, and stable occupancy exist in the market. If Charlotte is finance, services, and logistics, Greensboro is advanced manufacturing, aerospace, and logistics. This is where we see long-term rental demand growing for decades to come. Aerospace leads the way. Boom Supersonic is building its $1 billion Overture Superfactory at PTI Airport and is expected to create about 2,200 jobs. PTI is a FedEx Express hub, providing major cargo capacity. That infrastructure supports just-in-time manufacturing and distribution. For multifamily, that translates into thousands of stable, mid-income jobs across shifts, exactly the renter profile that sustains workforce housing. Then there's electrification. Toyota is investing billions into its battery manufacturing facility in nearby Liberty. Thousands of jobs are planned, with production starting in 2025. Projects like this ripple throughout the housing market for years. Nationally, multifamily demand re-accelerated in 2025 as household formation improved. In Charlotte and Greensboro, that means more predictable leasing velocity, fewer concessions, and clearer, stabilized rent levels. In Charlotte, new supply clustered around the south end and light rail corridors. As those lease-ups burn off and starts pull back, older vintage assets with thoughtful renovations become more valuable. In Greensboro, supply has been steadier. Meanwhile, industrial payrolls are rising, and that imbalance favors well-located workforce housing. Add in healthcare and education employers, and the rental pool is both wide and durable. Affordability reinforces it all. Charlotte remains more affordable than many coastal metros, and the Triad is even more budget-friendly. That resilience is exactly what we underwrite to. So what does this mean for Rise48 Equity? First, we target submarkets with job anchors and proven leasing velocity, not just where cranes are. Secondly, we buy where we can control outcomes. Our vertically integrated model allows us to renovate, reposition, and measure renter demand directly. Third, we underwrite conservatively. That means realistic rent growth, realistic concessions, and capital plans that focus on durability.